Legally, corporations are people, and in many ways they have many of the same needs as the typical retail banking client. They need a place to deposit funds and occasionally need loans to enable larger purchases. However, they also have a wide range of other, more complicated needs that require much more sophisticated banking solutions. Let's discuss those needs. First, deposits. Corporations can generate a ton of cash. While much of this gets invested in longer-term, higher-yield investments, they also need cash that they can access easily to fund their daily operations and expenditures. This is typically done through a demand deposit account, which is in many ways equivalent to a retail checking account. Cash deposited in a DDA can be accessed on demand and is typically what is used to store receivables collected and pay invoices. But while a retail customer typically has one checking account, a corporation will have many DDAs. Each business unit will likely have its own account, and corporations present in multiple geographic markets will need a separate DDA for each legal entity. This makes global coverage a key competitive advantage for corporate banks. Corporations want banking partners that are present in all of the markets in which they operate. Additionally, DDAs for corporations are much more complicated than a typical checking account. Each account has specific restrictions around who can access it and what approvals are required for withdrawing funds. Detailed tracking is required for tax, audit, and security purposes. Setting up these accounts often requires a full-scale implementation project. Large corporations may have hundreds of accounts across multiple geographies with thousands of potential users. While DDAs provide easy access to funds, they provide little to no interest on the large amount of cash that corporations receive each day. To address this, many corporations use what is called a sweep account. These accounts are linked to a higher yield account, such as a money market fund, and automatically transfer funds whenever the balance is above a certain threshold. This allows corporations to ensure they have sufficient funds accessible for daily operations while also earning more interest than a DDA alone would provide. In addition to these deposit products, corporate banks also provide cash management services. While corporations hold large amounts of cash, they may not have it at the right place at the right time. Corporate banks can help solve that. They offer services to help corporations see where their funds are located, as well as manage moving money across accounts and between different countries. This may require currency conversion, as well as ensuring the transfer complies with regulatory requirements on both ends of the transaction. There is also typically a certain amount of settlement time before the funds are actually transferred between jurisdictions. Corporate banks can provide bridge funding to their clients while they wait, providing them immediate access to funds to continue their operations.